Hello guys, welcome to my channel. Here we talk about everything finance, from personal finance to savings to investing. Whatever you want to do with your money, we are here to guide you. Of course, you have to do your own research. Oh, please don't take my word for it. Invest your money very wisely. Don't lose money. Don't be scammed. Whatever we tell you here is not an investment advice. It's just a guide. Make sure you do your own research. Thank you. So, a few guys have been asking me about bank stocks and the recapitalization. How can we invest? Is it good? Is it not good? Well, today we're talking about bank stocks and how to invest. Maybe stocks generally. The first thing I'd like to tell you is that if you are not a risk taker, you don't have a high risk appetite, please don't go into equities. Don't buy stocks. You can put your money in treasury bills. You can put your money in government savings bonds. I'll talk about them in another video. You can put your money in fixed deposits. These are principal guaranteed. You won't lose money, but you won't also earn a very high interest. So if you are a high risk taker, you believe that the country is going to do well, you believe that companies are going to do well in 20 years, in 30 years, in 40 years, you want to buy something and leave for your children, then continue to watch this video. Follow me as we talk about stocks, okay? Okay, first I really need to guide you again and also to warn you, stocks is risky, all right? There are many risks associated with buying stocks, with buying equities. The good part is that you get to own part of a company. Imagine being a part owner in Zenith Bank or in GT Bank or in Access Bank or in UBA or in Unity Bank or Fidelity Bank. You get to be a proud owner of part of a company. But there's also a lot of risk, okay? There's the risk of obsolescence. A company can become obsolete overnight because of a new technology. There's risk of regulation, okay? The regulator might bring up rules overnight that will put a company almost completely out of business. There's also rating risk, where people who rate companies will just downgrade the company for some reason, and then customers or investors will pull out their funds and you could lose money. There's headline risk, there's inflation risk, there's currency risk, where the naira is falling or rising related to the dollar. All of these things affect big companies, okay? Like I told you you've got to do your own research, all right? So let's go on to the benefits. Enough of risk. Where's the money? First of all, I would like to talk about how you make money from buying shares, from owning equities. The first thing is that you buy them and you resell when they have appreciated in value. So for example, you want to bank on GT stocks and you say, okay, this stock currently selling around 45 naira per share is going to be more valuable in about 5 years, maybe to about 40 naira, and then about maybe 50 naira. So you buy, you hold, and you sell for a profit. Another way you are going to make money through shares is dividends, and Nigerian banks are very good at paying dividends. As a matter of fact, a lot of people have problems with Nigerian banks because their stocks don't appreciate much, but they pay dividend. In 5, 7, 10 years, you would have recovered, if everything goes well, you would have recovered all the money you used in purchasing the stocks, meaning that you would break even and then you start making profits. And these banks might keep paying you dividends for 20, 30 years and continue to pay your children long after you've gone. So first, you buy them to anticipate value, and then secondly, you buy them and then they pay you dividend. The third one is that sometimes these companies have special offers for existing subscribers. So they let you buy as a subscriber at a lower price than the market price. For example, you would have seen Access Bank, GT, Zenith, Fidelity having special offers. For every 5 shares, for example, you can purchase an additional share at a lower price. So these are all how we make money from equities. Okay, we really can't talk about investments, especially in financial assets, without talking about simple and compound interest. The beautiful thing about equities, about stocks, is that they compound. Now, simple interest is when you earn interest on your investment principal, and then you can take out your interest and spend or do whatever you want with it. But compound interest means that your interest is earning interest, and that interest earns interest, which in turn is invested and earns interest. So it's like having a child who has a child who has a child who has a child, and all of them are working for you. So compounding is really your money working for you. So you can see how that investing a small amount over a long period of time can make you wealthy. So this is one of the surest ways of building wealth. You achieve it very slowly but consistently. And by the time you start compounding, there's no limit anymore because you have a whole lot working for you. So that's simple interest versus compound interest. So keep that in mind as we move on. Okay, so let's go to the how part, how to invest. Now, because of technology, a lot of things are now a lot easier, okay? So investing in stocks is no longer as difficult as it used to be. You can do it from the comfort of your home, from your phone or from your tablet. All you need to do is to get on a platform, pick a stockbroker, and we have lots of platforms regulated by the Securities and Exchange Commission. We have lots of stockbrokers registered, licensed, and regulated by the Securities and Exchange Commission. They also have insurance, okay? So your money is insured up to a particular limit. Make sure you do your own due diligence to check how much is insured as per the broker. So how do you invest in stock markets? You can use a whole lot of platforms. You have mobile platforms, you have ngx is probably the most popular one out there. Just go to the Nigerian exchange website and you'll be allowed to register, enter your BVN, your NIN, and validate it, and you get to choose a stockbroker. There are a whole lot of stockbrokers out there. You can you can check the list of stockbrokers to know the volumes that they transact per day. I would advise personally that you go for the stockbrokers that are high up there. So once you pick a stockbroker, you enter the number of shares of a company you want to buy, and you can even pay with your ATM card, or you make instant transfer, and boom, that's it. You are a proud owner, along with Tony Elumelu, along with Jimovia, and along with Motedola. So is that easy. So that's how to invest in shares. So how do you choose the company to buy? Should you buy Dangote Refinery? Should you buy Dangote Cement? Should you buy Bua or Lafarge? Should you buy Unity or Fidelity Bank? Should you buy Zenith? You look out for companies that are valuable, okay? Do a lot of research. Look out for valuable companies whose products are likely to be in existence for a long time. Coca-Cola has been alive for since God knows when, and they are not about to leave the market. We've talked about sugar and how bad it is for our health, but for some strange reason, Coca-Cola is still on the rise, okay? So for example, look at the big guys, look at their management, look at the news. Has there been any negative news recently or in the past? Just do your own diligence. There are lots of advice there on the internet, but if we are talking about bank stocks for this episode, so I can't tell you what banks to buy, but I'll just tell you, look out for the bigger guys. Look out for the guys who have been paying dividends consistently. Look out for the guys who are expanding, who are looking to forage into new markets, who are innovative, who are stable. These are the things you need to pick your desired stocks. Okay, I'll leave you with this final word. Please Be very careful. Also, I need you to watch out for COF, cost of funds. Every broker has charges. Watch out for brokers that will charge you minimal, so that you don't pay too much while trying to invest. This goes for all investments. There are always costs of your investment, so please watch out for the costs. How much are they charging? There are usually no hidden costs, so every stockbroker would let you know what it will cost to invest through them. Okay, now it's also worthy of note that there is no capital gains tax on your investments in stocks, except you are doing volumes of over 100 million naira, which only few people will do for now. So your investment is nearly tax free. So go out there, buy shares, buy reasonably. Don't invest all your money in shares. Remember to diversify. Put only money that you can afford to keep for 10 years, for 15 years, for 20 years. If you are 50 years or 60 years, I don't advise buying stocks. Do principal guaranteed investments. You don't want a heart attack. If you are young, you are 25 to 35, it's time to buy shares. Don't be afraid. Bank on the country, have some hope. Come on, have some faith. Everything will be okay. All right. Cheers.